So AT&T released some earnings on Thursday, and I gotta say, I'm loving it. I loved almost every bit of it. And as a matter of fact, I knew AT&T's earnings were going to be fantastic even before the earnings came out. And that was because the day before, Verizon released their earnings, and their earnings were fantastic. So anyways, let's talk about it. So we're going to hit the high notes, we're going to talk some numbers, and of course I'm going to sprinkle my opinion over every bit of that. And then at the end, I'm going to talk about how I feel about AT&T's earnings and about AT&T moving forward, and of course my strategy with my investments. So we are talking consolidated revenues of $44 billion, up 7.6% from last year. And if we take a look here, Yahoo Finance still has the analyst estimates for the quarter we're talking about, so we're going to use that. So as you can see, $44 billion tops the high estimate as far as revenue. We're looking at 89 cents adjusted EPS, which is the high estimate, so very, very good. And if we take a look at their 2021 outlook, now you will note, if you paid attention to their last earnings, that they had consolidated revenue growth in the 1% range. Well, they upped that to 2 to 3% range. Now, that's not anything to write home about, but that's welcome news. I mean, AT&T is not like a 10x company. It's a value investment. So to see them, up their outlook at all is welcome news. Adjusted EPS, I think they had that flat. Now it's going to grow in the low to mid-single digits. All that is completely welcome. So they beat revenue, they beat EPS, and they upped their outlook. A triple beat for AT&T. Now, say what you will about the company. Say what you will about AT&T's ever-shifting business model, but AT&T is a very, very financially strong company, and it brings the performance, and we're going to look at that in a second. But, I mean, as maybe, AT&T is certainly not a 10x stock, but no one's buying it for that. They're buying it for a value investment when they consider the price undervalued, and they're holding it for the long term for, either capital appreciation or dividends. And just hitting on some more of the highlights, and we're gonna take a look at the numbers in just a hot second. But for now, I mean, the communications, they net adds across the board here up, operating income margin 31.7%. They upped in their consumer wireline. Warner Media, oh my goodness. Now we all know. Now, just to make it clear, I want to say this now. In their entire earnings transcript, it came up in the Q&A, but John, the CEO, he did not mention at all the Warner Media, split off. We know what's happening, but they barely mention it in the earnings thing, and it's a real shame. And I know I say this every video, but I understand what AT&T is trying to do. I know what AT&T is trying to do. It's spinning off all of its non, cellular and internet-based assets. I mean, right now, they just announced that, they just announced just a few days ago that they're selling Vrio. But anyways, where am I at here? Yeah, like, I understand what AT&T's trying to do. They're trying to go back to pre-2015, where, before the previous CEO started buying and acquiring different companies left and right. And for the most part, I agree with what John's trying to do with spinning off all their cellular and internet stuff. But Warner Media, that was a catch, man. I disagree with AT&T's decision to spin off Warner Media. Now, for shareholders, we do get the company that, Warner Media and Discovery are going to become when the deal closes, I think, in 2023. So shareholders will continue to reap the benefits of Warner Media. I still just think it's a mistake. Like, given these numbers, like, they're up in their global HBO Max and HBO subscribers. They're dominating in all aspects as far as revenue. So enough with the highlights. Let's take a look at some actual numbers. Operating revenue, as we know, went from $40.9 billion to $44 billion year over year by the quarter, and $83.7 billion to $87.9 billion by the 6 months. So if we take a look at operating income, you will see it has gone down year over year by 7.4%, and that seems to be due to the fact that AT&T is really ramping up the equipment spend and really ramping up the broadcast spend. And that is not, that's not a surprise given how hard AT&T is going into their 5G business, how hard AT&T is going into They're, building out their Spectrum 5G. That is not a huge surprise to me. Net income, year over year by the quarter, increased 19.9%, which is very, very, very welcome, from 1.5 billion to 1.8 billion. Now the balance sheet, and you know how I love balance sheets. Now this is compared now versus December the 31st of last year. Their cash on hand increased from 9.7 billion to 11.8 billion. Fantastic. Total assets increased from 525.7 billion to 544.7 billion. Very welcome news. Now, the debt maturing in 1 year. This is their current debt. Now, this increased from 3.5 billion to 24 billion. This is actually welcome news because that means that once they pay this off, by this time next year, they should be a lot lighter in the debt as long as AT&T stops racking up new debt, which apparently they're committed to doing. Now, one thing I want to mention is that AT&T did mention that in their earnings call that the DirecTV that they're selling DirecTV, that's supposed to close at the beginning of August. So once they get the influx of cash from that, they're supposed to be using it to help pay off their debt. So in the upcoming quarters, we should start seeing these numbers go down. Now, as far as their long-term debt, they did jump up a little bit from 153.7 billion to 155.7 billion. But, as long as AT&T executes their strategy in paying off their debt, like they said they're going to do, we should be fine. Now, one thing I do want to point out, and I think this is fairly important, is that if you add up their long-term debt and their short-term debt, you get 179,783. That is less, as of right now, than their total stockholders' equity of 179,846. That means that as of right now, as of this earnings report, they have less total debt than equity. And I think that is very welcome news. Very welcome indeed. Take a look at their cash flow. You will note that they have dropped. Now, this is on a 6-month period versus the 6-month period last year. They did drop as far as their net cash provided by operating activities to 20.9 billion to 20.8 billion. That's not the end of the world. It is down, but it's not, it's not the end of the world. You will see down here where they took out more debt. Now, this was due to they had to pay the they had to bid on that C-band spectrum earlier this year. Now, this is from a 6-month period. Now, as I've said in multiple videos in the past, their bid, for that C-band spectrum is a good thing because that means they won second place. So that means they could potentially have, if they build it out correctly, the second best 5G network in the country. So the debt that they took out is justified, but, I still don't like to see it. But as long as they're done and they start paying off their debt, and I know I keep saying this, as long as they're done and they stop taking out more debt to do stupid acquisitions, we should be good. Now let's go over some more numbers here. Nothing too major, and I'm not going to go over every bit of this. I encourage you, like, if you're, looking at AT&T to buy more or researching it to buy it all, that you go through all this stuff yourself. But just to hit the high notes here, communications has been doing real well compared to this time last year. Although, although it's hard to, given last year and how horrible things were, and I'm not surprised to see that anyone's doing better than this time last year. But, AT&T is doing really, really well as far as the revenue. And Warner Media, they hit a bottom last year. And ever since then, their revenues have been jumping up quite a bit. Now, I will be the first to admit, if you scroll down here to their EBITDA, they've taken, this past quarter, they've taken a bit of a hit, compared to this time last year. If you take a look at their operational PDF, you will see that their Warner Media, they've been putting a lot more money towards programming and a lot more money towards marketing, which sort of explains their, the jump in operating expenses. I just hope that, their revenue will start to make up for it over a period of time. Phones have been doing really well. A dramatic jump in subscriber count, postpaid, prepaid, connected devices. Very, very nice. And a very massive jump in net subscriber add-ons. Their churn, they got their churn down to 0.69. Nice. Now, as far as their business wirelines, they're a little bit down in revenue from last year, down in operating income, and down in EBITDA. Again, not the end of the world. They're still performing very well. It just compared to last year, the business wireline is taking a bit of a hit. So yeah, AT&T had a very good, earnings report and a very good earnings call. I was very pleased by it. I can't really find too many things wrong. They didn't add a whole lot of color, more than we already know as far as the Warner Media spinout. That's supposed to happen in 2023. But, I think the first question on the Q&A was a question about that. And I think John pretty much said that they don't have any information to give because the deal just, was announced. And other than the information they gave, then that's all we got for now. So I assume we'll get more details when as we get closer to 2023. So what am I going to do with AT&T? Right now, AT&T trades at $28.15 as of right now. I'm recording this on Saturday. The 4 PE is still very, very attractive. And as far as I'm concerned, I'm going to keep buying AT&T. That's my strategy. That's the whole thing. As long as this thing remains below my cost basis, I'm going to keep, nibbling some more shares. I mean, AT&T is very undervalued right now. And I'm just going to keep nibbling on more shares until, AT&T goes above my cost basis. But anyways, take care, have a great day, and eat your vegetables.